Okay, good morning everyone. My name is Dennis. I am the CEO of Pips Matter, and I'm going to be presenting this video today. So, to begin with, I'm going to go over everything you need to know before you start trading today. And I'm starting with the possible market movers. The first and most important will be the GBP the UK construction PMI, which will affect the GBP. We've been having some very decent figures from the GDP, well, from the PMIs from the UK, but that could all begin to stop this month. Now, moving over to the US, you obviously all know that today is the ADP non-farm employment and the FOMC statement, which is followed at the same time by the federal funds rate. In the middle of the news from the UK and the US, we will have crude oil inventories. Okay, so let's go over the most important stuff. The most important things today, like I said, will be the FOMC. The meeting. The main focus throughout the market will be on this FOMC meeting. Keep in mind this, with the elections taking center stage, the markets yesterday were reflecting the elections in the US. So, the most important thing that we will see today will be a continuation of the announcements. Of the elections and the FOMC meeting with the rate announcement, which is due out at 7 p.m. Central European time. It is important to note that this is one of the rare meetings without the press conference or updated DOTS results. Now we expect the Fed to maintain this target range of 0.25 to 0.50 in line with consensus from around the market due to the presidential elections which are happening next Tuesday on November 8th. It will be very interesting to see what part of the FOMC statement is released today. In 2015, the Fed, this time, last year, more or less, pre-announced the Fed hike at the October meeting. But unlike last year, this time the markets have more or less priced in a Fed hike before the meeting. So the markets believe there will be a rate hike by the end of the year. This is a very high expectation. Now, what we believe will happen, we still believe that the Fed will not raise its interest rates, but that could all change with the economic figures that come out on Friday, today, and next week. Now, in terms of data releases, the US ADP and employment change will also attract a lot of attention because it is obviously coming up prior to the US jobs report, which is coming out on Friday. Now, we continue to receive lots of mixed signals about the labor market, but the ADP unemployment is actually estimated to have increased last month, to 165 from the following of 154 in September, indicating that the US labor market remains with solid growth. Now, you all know how we think. We don't look at these numbers. We wait for the results and then we act. I don't want to guess on these results. They could come out weak, they could come out strong. We see the unemployment rate in the USA becoming much worse as years go by, and the cycle is changing. Now for Europe, we do have the UK construction PMI, and that might attract some attention. There will be some European manufacturing PMIs also for October, but like I said, the UK construction PMI will be the most important thing coming out this morning. Now, like I said, the FOMC minutes will attract lots of attention today, of course. It will be very important to see what will happen. Now, I want you to picture this scenario. Imagine this simple scenario. Imagine the Fed, the doves from the meeting, because right now there's a bird fight there. Imagine the doves winning that fight today. Imagine the doves pointing out that there won't be a Fed hike. The chances will drop. The dollar will crash. The gold will significantly rise. So think of it like this. They destroy the chances of a Fed hike right now in this meeting, and then they move over and actually do it in December. So Euro USD higher and then lower. Could go very high today. That's something I'm expecting to see, but let's move over to everything else and then we'll come over to the charts. Bring your attention, your eyes and ears with me for the next slide. Okay, so I'm going to go over something that's interest rate related, something very important for next month. Okay, so the October jobs report is due out this Friday at 1:30 Central European time. Usually it comes out at 2:30, but because of the time change in Europe, it's coming out at 1:30. Very important to remember this. Now, this jobs report will provide important input into the Fed decision as to whether they will actually hike or not this December. I'm going to go over some, well, three very important points. First, the labor market data in October has been mixed, with unemployment rates rising and the numbers are coming out pretty bad. Now, there is also a very sharp division amongst the Fed members regarding their views on labor market developments. The hawks are arguing that monetary policy needs to be tightened as the economy risks overheating if it doesn't happen. Now the doves, on the other hand, argue that the economy still has some room to run, as there is still slack left in the labor market. That's what they believe. Now, it's going to be interesting to see what happens today and Friday. It will be very important for the December decision, but also 8th of November will be really important. It's a day that I'm not going to sleep. Now, the subdued core inflation and slow wage growth means that the Fed can actually afford to stay patient. These are facts. Recently, Fed Chair Janet Yellen expressed the idea of letting the economy overheat a bit in order to undo the negative supply side effects caused by the financial crisis. This will all be very interesting to see, and tonight is a very important night for the financial markets, the USD, gold, and pretty much everything else. Okay, let's move over to something else. Just stay tuned for a second and we'll move over to slide number 6 and more important things. Okay, this is the last slide before we move over to the charts, and this slide will be about oil. And it's very important to note that we've made significant returns on oil and indices in the last couple of days. We see oil room for heading lower. We see that there is quite a bit more room for oil heading lower actually. We see oil heading down to 44 in the near term and then to 40 by the end of November. So we see lots of activity happening in oil. OPEC is finding it very difficult to reach an amenity with its members. Iran, Nigeria, Libya, and even Iraq are seeking an exemption from the production cuts. Now they're saying that they want to restore production hit by the sanctions or conflicts within their countries. So they want to be excluded from the production cuts. The Saudi-led cartel wants to cut joint production to a range of 32.5 million to 33 million barrels per day. Okay, OPEC outputs will likely hit a record high this October, raising to 33.82 million barrels per day. This is going to cause for oil to head even lower. And the way it's going to go up, down, up, down, up, down, and a nice downward trend. And I'm going to show you a picture right now. So I hope you're ready. We're going into charts right now. Okay, so the first chart to begin with will be crude oil and WTI. We've been showing you this for some time. I mean, whoever followed us on this definitely made money day in, day out. We've been selling this daily. Only one day out of all the days we haven't been in profit. We see oil heading even lower, and I'm going to show you how on this chart over here, and something shorter, how you should get in and out. As you see, oil moves in a trend channel. So it goes up and down, up and down. Every time oil goes up, you go down. Well, we will go down. Today we begin selling again. We see price heading lower. Maybe the crude oil inventories could give us a small setback, or they're going to help us get in the money even sooner. I'm going to go over some indices right now, and hopefully we'll just find them. We don't have them here. Okay, so I'm going to go over indices again. So the first up is the FTSE 100, which is the UK 100 on the C-Trader platform. We see FTSE heading lower again. Yes, today there could be small reversals back up, but we see FTSE heading much lower in the long run and in the short run. We see a big crash coming soon, possibly price heading higher before heading lower. So be ready for a scenario like this, up and then down. Be ready for this, okay, for this up. This is what you need to be ready for, the up. It's not going to just drop down like crazy. It's going to go up before going down. So be ready for that. We're going to move over to DAX, which is Germany, GER 30. And I'm going to do this, and here we go. We see the same scenario happening with DAX. We see DAX heading much lower. I explained yesterday why. If I show you this here, and I take this here, and I go like this. 1 second, we need to go to the weekly chart. The start of this up to this one here is about 90 weeks. This is a very important number, and as you see, we've had a very strong weekly fall, and it is just the beginning of the week. We've already down 2.3 thousand pips this week, and it's only Wednesday. The last time this happened was right around here, which was in September. And we can see that happen. We can see an even bigger drop. We can see this kind of drops. For example, something like this. So double of what this candle is. And for the last one here, I'm going to go to the US. And that will be the S&P 500, which is the US 500. We see the US 500, the S&P 500 heading much lower. After this massive uptrend, we see hopefully a formation of a rounding top. This usually takes a few weeks, sometimes months to form, and as you see, this is forming for a few months now, this rounding top. For the last 18 weeks, we've been forming this rounding top, and if this turns out to be a rounding top, you're going to see S&P 500 drop just as fast as it went up. It's going to drop even faster, 2 times faster than that. Okay. Where are we going next? We're going to go over to some currency pairs. We see New Zealand US dollar. We've taken these trades on our account. We bought it. We see this heading a bit higher, but we're not going to touch currency pairs until the FOMC. So if you're interested in what will happen with the market, with trading, then you need to join us on these 2 events, and you'll find them in the comments, not in the comments, in the description of this video on YouTube. You'll find the links, the direct links to our live trading chamber, which will be the last time this week. It will be hosted for free. From now on, if you want to watch them, if you want to watch all of them weekly, well, then you need to subscribe to them. Or take on the free trial, test them more, and then take it from there. We have 2 today, ADP and FOMC. Now, before I let you go, I have one final piece of information to share with you. Did you know that the stock market behavior in the last 3 months before the US presidential elections has correctly predicted the winners since World War II, with only one exception? Now, if the trend continues as it is going, then Donald Trump will become the next president of the USA. This is a fact backed by historical data. The data states when the American stock market slips in the period from July 31st to October 31st, the ruling party loses the election. I have much more information to add on to this, much more information why Donald Trump will win the elections, but I'll actually make a post of this and I'll let you read it for yourself and then be the judge and jury. Thank you for watching this video. Have a safe day and see you in the live trading chamber. Take care.